I got this message to really focus on talking about how to ask investors for money. It touches into valuation, company formation and structure, and that process. And I will leave some artifacts in the description in case you want to look a little deeper. So the first step is create a bank account. You have to be in the banking system, and what I did here is I just said, let's say we create 1 million shares and they're each priced at 1/10 of a penny. So that ends up being $1,000. I'm going to stick it into a bank account, and I'm going to put that bank account as the corporate bank account, and that's all it's used for, is corporate business. Next, I need to incorporate as a separate entity. Typically, people go to Delaware and they file their articles of incorporation and they adopt the bylaws that they're going to live with. They establish a board in which you have board meetings and everything's approved by the board, minutes are taken, and you are then able to set a value for your shares, whatever you pick it to be. And you're now in business to go out and raise funds. What you've created is a pie. And at the beginning, that pie is 100% the founders. That's the way the pie works. But if you bring in somebody, they then own a piece and your share is diluted. And so everywhere along the line, as you sell more shares, each share's percentage of the pie goes down, but the value of the shares goes up as the value of the pie increases. And at some point, you may want to expand the pie. You may want to issue more shares, in which case, if these guys don't up their percentage, they're going to lose, they're going to be diluted to less of the pie. And so calculating at what price did you buy your shares, and then those shares are worth what amount of the overall, that is what calculates its value. So I created a little seed round calculator, which takes into account the elements that go into determining the value, and you can actually plug in 6 million and you want 1 million in, and you're going to have an option pool, which means you're going to give stock to other people who are part of your team. How many founders? And let's calculate the cap table, and there it comes. After that money comes in, it's a $7 million value, and here are the stakeholders. Now that you are established as an entity, you can create your pitch. And that comes down to what problem do we solve? And for instance, with QCAM, you've got all these people working independently, and they've got to give presentations, but they may be remote, they may be in their home, they're sitting on Zoom, they're talking head, and they don't have their graphics designers, they don't have their production assistants. We see a great opportunity to help those people. And we can show how to solve it by giving demos of what we do. Then we talk about who's on the team, and particularly would be Michael, and all of the things as a tinkerer and inventor and technically astute entrepreneur, he's able to do the things that he's been able to do, and how the plan is unfolding, what we have in place and where it's going, and where that capital will be used. Those are the elements of the pitch. The ask, that 10% of the pitch that asks for money, is talking about what are we offering, what percent of the stock at what amount will give you what percent of the company. And what we're going to do, once again, with you on board. This is the ask. So an interesting case in point is Figma, which just filed to go public. And so I asked for information about them, and what they had told people, while engineers have GitHub, writers have Google Docs, designers were stuck emailing sketch files back and forth, losing track of versions, and struggling to collaborate. Technically, the founders had worked on many different experiments. They had built drones, meme generators, other creative tools. All of that just showed they're capable. And they did not give slides. They just give demos, and they created some very interesting tools like a browser-based Photoshop knockoff. And what they had at that point of their first investment was 177 million shares, in which they put at 9 cents to be involved. That they ended up with $135 million owned by the founders, 42 million owned by the early investors. And over time, they increased that share pool, but their pie kept growing because of the traction they were getting commercially. Their cap table looked like this. After that first round of funding, they had 177 million shares owned by the founders, the venture fund, and other seed investors. So this story is what makes the ask tangible. So an investor can see what percentage they're going to get, and you can see what you're giving as far as a part of the company going forward. And without it, they won't participate. They won't even listen.